So mid-afternoon, the government came out with news about how they're going to restructure the Freddie Mac and Fannie Mae portfolios to help mortgage payers with their mortgages. What that caused was the market to whipsaw. It rallied and then sold off at the end of the day. And that seems to be the standard operating procedure. Anytime there's a rally without conviction, it's just sold into. And that's I think you have to be really on top of things to understand when it's a rally and when it's a fake rally. It's very confusing and very whipsawy. What that forced though, or what that caused was the stocks that I was watching. There are stocks on my stock list, watch list that formed divergences, bullish divergences, and like a couple of Bank of America and Citibank did. Those are ones I pointed out yesterday. And I'd say about half the ones that I was actively watching for this pattern formed the divergence. The other half didn't form the divergence. And in looking at them, I would say there's two possibilities here. One is that the market continues to go down, and divergences are formed on the second half, the ones that I'm waiting on. The other possibility is that we do have a rally tomorrow, or maybe it's the next day, but we do have a rally, and those first set that form the divergences are the ones that are the true indicators. Needless to say, I don't know. There's so much negative sentiment out there. The smart man would say that it's going to go lower. Right? We're going to test the lows again before we go higher. But what the heck? These are my indicators, and they're supposed to indicate when I'm supposed to get into stocks, so I followed them, and I'll show you what I did. We'll start with the NASDAQ 100, and this has created a divergence. Here we got lower and higher, and here we got higher and lower. And it certainly didn't take off, I would say, at the end of the day. It certainly pulled back, and we'll see how it goes. I'll just run through the things that I watch. Looks about the same on the complete NASDAQ. You see the S&P 500 looks about the same. S&P 100 looks about the same. And the Dow Jones looks about the same. So pulling up the daily of the Dow Jones, it hasn't created a divergence here. Nothing says that it has to. It could just continue on upwards. If you look at the NASDAQ 100 as well, same deal. No divergence. And to complete the channel, it probably would come back down another 3 or 4% back down to that level. Going over to my stocks, looking at Citi, that created a nice divergence. And the thing I like about both Citi and Bank of America is if you look at the daily chart, if that divergence in the hourly works out and it does rally, this is going to rally as well, which will create a daily divergence, which is really nice. And if you look at the weekly on Citi, it creates a weekly divergence as well. So I've heard people say before that when things look the worst, that's usually the time that you want to be interested in buying. And the sentiment on financials has got to be at the absolute lowest. And if you look at Citibank in particular, I wouldn't say so much about Bank of America. I think Bank of America has some support out there from people, but Citibank, everybody hates it. I don't think anybody out there would say go buy Citibank. Bank of America looks similar. You got the stock going down, and you got a nice little divergence there. And the daily looks the same, and the hourly looks the same too. I'm sorry, the daily and the weekly. I'll show you the weekly here. Very nice divergence if it rallies out of that, which of course I'm hoping it does. Okay, let's go back on to other more short-term positions. So you got here to here and here to here. I said, okay, that's divergence, I better get into it. So I decided to get long BRCM. Coach, same thing. Hewlett Packard, same thing. Potash, same thing. and titanium metals, same thing. So here's when I was watching ACI, coal company, that looks very similar. BTU hadn't created, it didn't create a divergence. It was just looked like it was turning back up. So I'd be watching to see what that does to try and make a decision. Chesapeake Energy, same sort of deal. Not really a divergence. You could say that it's a divergence if you play these MACD differences. EMC was one I was watching, but it just didn't fill out to do its divergence. Here's one I thought was interesting. It's Goldcorp, and this is a gold mining company, and this was an opposite divergence. This was a bearish divergence, and I like to watch. This is my token gold stock because gold just moves differently than other things, and sometimes it goes down with other things go up. So I like to watch this gold stock and play it sometimes opposite or with the market, just depending on what indicators it shows me. Here's another one that hasn't completed its divergence. It would though if the MACD turned back up and rallied. And Apple's one I like to watch. I don't think this is technically a divergence in the MACD. It would be a divergence if you're playing the MACD differences. And at this level in the 90s, it's got to be attractive. If you look at the daily on Apple, a divergence would force it down here into the 80s again, which would be really attractive. But I was wondering about the strategy of buying the stock here in the low 90s and selling calls to sort of isolate yourself. Just pull like a 5% or more take out of it. First Solar's another one that I just continue to watch. I think down here under 120 would be something that I want to get into, and we'll have to watch and see how this reacts as we go forward. If it did turn, this is the daily, if it does turn down at below 120, I think that would form a really nice divergence right here, especially if it came all the way down. And well, obviously it would have to come down and bounce off of this level down here. We'll see if it does. When I decided to start doing this, I realized that there would be embarrassing moments out there when I told you what I traded, and that some of my moves are going to be stupid. And I gotta think that even the guys on Fast Money do stupid trades. They just don't tell you about them. So I guess we'll find out tomorrow. If the market, it depends on what the market does when it's not a holiday and everybody's back. It could be a stupid trade. Steve, why did you buy in this market? I mean, it's a crap market and it's ridiculous. Everybody's selling. Or it could be a brilliant trade. Steve followed his plan. He had his indicators and they went off, and he followed his plan and he made money. We'll see.